So that's it for the non-farm payrolls report. Again, a straightforward reaction is expected. Watch out for wages. And now for our currency of the week, euro-dollar, the world's most popular currency pair. We'll discuss 4 factors moving euro-dollar. First is the data and the ECB, rising inflation in the ECB. Second, the French elections, of course, it's coming up right now, the second round and final. Week US, then we'll move to the United States, also talking about the data first and the Fed, weak US growth and the Fed, and then we'll talk about politics. Donald Trump passed his first 100 days in office, so it's going to be 4 factors: economy and politics in both areas. Okay, so number 1, ECB and inflation. We just had an ECB decision. Let's talk about what happened and what we're looking forward. So Draghi was optimistic on growth, talked about diminishing downside risks, but more cautious on inflation. There's still need for accommodative monetary policy, and more importantly, they did not discuss any exit strategy. So the reaction to in euro-dollar was a mess, but eventually we stayed in the same place, and we're still at the same levels just before the ECB, just around 109. But then we learned that inflation is higher. As we mentioned at the beginning of the show, core inflation hit the highest levels since 2013, 1.2%. Other members, not Draghi, which is dovish, they already want to talk about the exits. They want to talk about ending the QE program, which currently is expected to end at the end of this year, and they might taper it down or end it abruptly, and raising rates. The June meeting could be the turning point, when they stop talking about downside risks, when they begin discussing the exit strategy, okay? Needless to say, always, the central banks, more data is needed, more inflation data. We need to see if the move in, we've seen now the data for April, the 1.2% core inflation is not a one-off. But in general, the growing economy, we'll learn a bit more today, is now showing higher inflation, not only oil prices, but also other things. I would suspect, as the picture here hints, that house prices are on the rise. Okay, at least here in Spain, rent prices grew something like 15%, jumped 15% in the past year. And this phenomenon might be related to other countries. So watch out for that. And that's core inflation, not oil prices, which are much more volatile. Second topic out of 4, the French elections round 2. So Macron, here on the left, Emmanuel Macron, 39 years old, leading the polls by around 20%. He's a centrist, pro-European, pro-market, young and charismatic, and Le Pen on the right, extremist, racist, anti-Europe. She wants to leave the euro. Just yesterday she said that she wants to leave the euro in a matter of 6 to 8 months after she's elected. And needless to say, no euro without France. Undecideds in these polls, the polls show 60 against 40, full 100%. They don't count for the undecideds, and some people are still undecided. Complacency among the supporters of Macron or supporters of other parties that probably vote Macron is problematic. They might not show up to vote, and the actual margin might be smaller. Okay, we've seen some erosion in Macron's lead, but it's still holding up 60 to 40, and that should be unsurmountable. So it should release some euro-dollar upside, as Ed asked beforehand. I believe we should see a bit move to the upside, but if we fall towards the elections on Friday, let's say if euro-dollar falls a bit, we might not see a new high, but in general, it should be positive for euro-dollar. We also could see 110, 112. A few opinions talk about that. I've published them on Forex Crunch. Anyway, but then we'll begin, of course, worrying about other issues. Elections for the French Parliament held in June. Macron can be president, but he needs to pass new laws, and he needs support in Parliament. Then we have elections in Germany in September, uncertainty about Italy, Greece. Things are looking okay in Greece, but you never know. In general, it's euro positive, but mostly priced in. In the shock event that Marine Le Pen wins, and after the first round, it seems less likely, but you never know. Euro dollar, I believe, will fall below parity. It's the beginning of the end of the euro. Chaos with Brexit, again, highly unlikely, but very totally not priced in. So we won't talk too much about that, but just take in mind, you never know the results until they are counted. Moving on, factor number 3 out of 4, weaker US growth. We mentioned this previously. Growth in the United States only 0.7, annualized the weakest in 3 years. It might be a seasonal event in some Q1s in the past. They have been slow, but not always. Underlying data is not so good. Retail sales, durable goods orders, investment, and also the soft data, as we mentioned, is softening. So businesses are a bit less confident. Consumers are a bit less confident. But still, the level of confidence looks better than what people are really doing. Just a second. So, anyway, employment lags growth. That's what I was worried about. So if employment lags growth, it means that we could have issues with the well, if growth is slow now, eventually it'll take time to show up in employment numbers, and that could be worrying for the Fed. Okay. I see your comment by Ed. Like, Trump was unlikely about the French elections. And I think here the gap is much bigger, okay? I want to remind you that with Trump, it basically showed the polls of the polls. Okay, the aggregate polls showed Clinton leading Trump by 3.5%. Clinton really won in the popular vote by 2%. So the polls were wrong, but 1.5% is not such a big off the charts. So what the polls were telling us, and of course Trump became president because of the system, because of the electoral college. In France, there's no electoral college. It's just general popular vote, and it's not a small gap of 3.5%. It's 20%. Again, with the undecideds, it might be smaller. I think there is a smaller chance. One thing I would note that today we have a debate tonight between the candidates, between Macron and Le Pen. If Macron's performance is a disaster and Le Pen has a really great one, then we can begin worrying. But I'm not sure that even if Le Pen gains ground and Macron loses ground, that there's enough time and enough people ready to come out and vote for Le Pen, and enough people to come out and not vote for Macron. So, of course, you never know until the votes are counted, but the chances are much lower. Also with Brexit, it was very close. Okay, the Leave campaign was behind, and they eventually won, but it was very, very close. Okay, continuing with our with the U.S. again, growth is weak, employment lags growth, but there is also reasons for hope, for optimism. The Atlanta Fed sees a bounce in Q2. They now project 4.3%. I think it's very, very optimistic. But in general, a more balanced dollar, not so strong dollar, can help exports. So maybe, I don't know. And there are reasons for hope. In general, the situation points to a lower dollar because of lower growth. And our fourth factor is the president, Donald Trump. He signed a lot of executive orders, also seen here in the picture. 100 days have passed. Initially, he did a lot with these orders, but he did little on the economic front. We still don't know what's next in terms of the big tickets. Markets care about three things: infrastructure, taxes, and trade. So infrastructure, he talked about the 1 trillion investment plan, both private and public, so not all of it is really spending directly from the government. So far, we haven't seen anything of substance. We had a budget deal on the government shutdown, averting government shutdown, and we haven't seen anything infrastructure related. So far, absolutely nothing. Nothing to talk about. Basically, a big disappointment on that front. We knew that Republicans were not really in favor of more infrastructure spending, but it could have struck a deal with Democrats and with some moderate Republicans. But anyway, nothing happened. On taxes, so last week we did learn about a very bold plan to cut the corporation tax to 15% and some other ideas, okay? But it was only one page without details, and that came after 100 days in office and 17 days in days in transition. All they managed to do is produce one page. It seems very, very unprofessional, to put it mildly, amateur. And we already heard from Congress, from Republicans, from the majority, that they're not really taking it that seriously. So there are some ideas, but so far, no change. And trade, here we did see that, well, in the first week, Trump took the United States out of the TPP agreement, so he fulfilled his campaign promise. But that was anyway problematic, and also Hillary Clinton was against that. He was relatively cool on NAFTA. So here is President Trump with Canadian Prime Minister Trudeau. They had a great start to the meetings, but towards the 100 days mark, Trump decided to pick up a fight with Trudeau about timber, lumber, softwood, dairy products, but hopefully things should calm down. So far, I would say that, Trump, they're staying in NAFTA at the moment. Anyway, Trump and China, he said he would label China as a currency manipulator on day one. That did not happen. He has cooperation with North Korea on, cooperation with China and North Korea. And China also did a gesture by holding up Trump's trademarks in China. Chinese courts ruled in favor of the Trump brand. We cannot say that's unrelated to a warming relationship. They had a good meeting, President Xi Jinping of China and President Trump. So far, it's no damage, better than expected. So on the trade front, again, TPP is gone, but China and NAFTA, things are looking okay over there. And what about the dollar? So I would say that so far, after 100 days, the administration hasn't been a disaster for the US dollar, again, not destroying trade. And but on the other hand, hopes were too high. Hopes were too high for infrastructure. Hopes were too high for cutting taxes. And now we're cooling down. Trump is less important to the dollar than he used to be. The Fed remains important. The economy remains important. I would say the bias here is to the downside, okay? Biggest manipulator is Japan, but it suits the USA. Yeah, the Bank of Japan is printing so much money. We do hear some noises from the US against Japan, at least the previous administration. The Obama administration talked about that, but it was not that strong. Switzerland is manipulating its currency out in the open, and the USA is quiet about that. So, you can understand why, I guess. Anyway, Donald Trump so far is not helping the US dollar. We had a big move in late 2016, and now things are not looking that strong. And before we move to the preview for next week, let's look at the euro-dollar chart to conclude this segment. Currently 109.20, resistance 109.50, further resistance 110, 110.40, 111.20, and 113. To the downside, we have 108.20, 107.75, 107.20, and further, much lower, 104.90. Okay.